Hello there, this is Jackie Arendse and here is the next video in my series of videos to help you to understand more about the South African tax system. And we are talking about provisional tax and looking at the provisional tax penalties today. Now, I have done some previous videos talking about, are you a provisional taxpayer? And if so, how do you calculate your provisional tax payments? And this is really following on from that. So if you need that information, go back and find those previous videos. And today I'm going to be talking about the penalties that apply to provisional tax. And these penalties can be quite severe and they can cause people a lot of trouble in terms of not just the amount that has to be paid, but having to deal with these amounts that might come as a big surprise. And there are also ways of getting the penalties remitted. We won't be talking about that in this particular video, but it's important, of course, to try and avoid these penalties if possible. Right, so if we think about the basics with provisional tax, so we've spoken about the fact that provisional tax payments have to be made, the first one 6 months into your year of assessment, the second one on the last day of the year of assessment. So if you're an individual with a February year end and let's say 2025, that will be your first provisional, would have had to be made by the 31st of August. That's 6 months into the tax year, and the second would have to be made by the last day of the year of assessment. We hear about the third provisional payment. That is actually a voluntary and optional payment. It's what we call a top-up payment, and I'll deal with that in a subsequent video. But there's no penalties around the third provisional payment, but the penalties come in with the first and second provisional payments. And the first one really is a timing issue, and so the penalty that applies there is really just a late payment penalty, but the second provisional payment can carry a late payment penalty and a possible underestimate penalty. So if we have a look at these penalties, the first provisional payment, we see the only penalty that applies there is a late payment penalty. The second can carry both the late payment penalty and the underestimate penalty. Well, let's not get too technical too quickly. Let's just have a look and see how these penalties work. So the late payment penalty, which can apply to both the first and second provisional payment, and then the underestimate penalty only applies to the second provisional payment. Now, let's just have a look at this late payment penalty. So the late payment penalty, like all of our late payment penalties that apply in the tax system in South Africa, it's a 10% penalty for late payment. And literally, if you don't pay the amount due by due date, you're going to end up with this late payment penalty. And sometimes this can catch you by surprise, because remember the due date I've mentioned, the first provisional payment has to be made 6 months into the tax year, and I've said the 31st of August, but be careful, because if that due date falls on a public holiday or on a weekend, the due date goes back to the last business day before that. And if we look at the 31st of August 2024, let's assume we had a first provisional payment of 100,000 Rand that was due to be made by that date. Oh, but when we look at the calendar, we see that the 31st of August was actually a Saturday. So actually our due date was the last business day before that, which was actually Friday the 30th. If you missed that and you only ended up making your payment on the Monday after, which would have been the 2nd of September, now your payment is made late. All right, and that's when the late payment penalty kicks in. So SARS would say, right, you should have paid 100,000 Rand by the 30th of August, in this case, the Friday. You didn't pay on time, so there's a late payment penalty kicks in automatically on the system, 10,000 Rand late payment penalty. All right, so that can be quite nasty. Now, as I say, it is possible in some circumstances to apply for a remission, but it's quite a process and you have to motivate, and it's not always guaranteed that you're going to get that penalty reversed. So you need to be really careful to try and avoid that penalty by making the requisite payment on time. So look out for that and be careful, because as I say, it can apply to both the first and the second. So when you've got a due date for payment, it's always the case with tax, you've got a due date for payment, you don't pay on time, you end up with a 10% late payment penalty. The underestimate penalty is actually even more onerous. It only applies to the second provisional tax payment, and as the name suggests, it applies where you underestimate your taxable income. Now, I went into this in the previous video speaking about how to calculate your provisional tax payment, and I went into the details of how to estimate your taxable income. And so there's specific rules around how much you need to use as your estimate. You can't go below certain thresholds. And if you do go below the threshold, you could end up with an underestimate penalty. Now, it can happen that with the second provisional payment that you end up paying late and you have an underestimate. Well, you don't have double jeopardy in that sense, because your underestimate penalty would be reduced by any late payment penalty that applies to the same provisional tax payment. But nonetheless, these penalties can still be quite harsh. Now, the rules for estimating the taxable income. So this is just a recap on what I covered in a previous video. If your taxable income will not exceed R1 million, that's your final assessed taxable income. All right, now that might only happen almost a year after the end of the year of assessment that you actually get assessed. And you've got to do this estimate on the last day or by the last day of the year of assessment. So you might not even get that right. You might think your taxable income is not going to exceed R1 million, but it ends up exceeding R1 million, and that adds, of course, all sorts of complications. But let's stick to the basics here. If your final taxable income does not exceed R1 million, then your second estimate of taxable income cannot be less than the lower of the basic amount or 90% of final taxable income, and the details of that I covered in the previous video. If your final taxable income is going to be higher than R1 million, then your second estimate of taxable income cannot be less than 80% of final assessed taxable income. So those are your thresholds, all right? And if you come in with an estimate on your second provisional payment that is lower than those thresholds, then you've got an underestimate, and you could end up with an underestimate penalty. Now, how do you calculate that underestimate penalty? Well, I've spoken about that minimum threshold. If you come in with an estimate below that amount, then it kind of opens the gate for the underestimate penalty. But interestingly, although we call it an underestimate penalty, it's almost really an underpayment penalty. So the penalty is calculated as 20% on the difference between what would your tax liability be, and that's after taking into account any rebates that you're entitled to. Work out your normal tax liability on the correct estimated taxable income. All right, so let's assume that you had used the correct rules over here, and you said, right, what would your correct amount be? Now remember, we only have to go through the gate of the underestimate penalty if you've come below that. All right, but we're saying, right, if you had used the correct amount, what would the tax liability be? Minus what have you actually paid in tax by the end of the year of assessment. And that's why I say it's actually more of an underpayment penalty. Because if you've underestimated that, but you still ended up paying enough tax because you've maybe paid a lot of employees tax, and maybe you paid more provisional tax than you really calculated, however that might work out, but you've ended up paying enough tax. So it's really based on, have you paid enough tax? All right, but if you've underestimated and you're a purely provisional taxpayer and you don't pay any employees tax, then it would be that you've not paid enough by the end of the year of assessment, and that's really where that underestimate penalty or underpayment penalty comes in. So it's 20% on the difference between what should you have paid if you had used the right estimates and what have you actually paid based on your estimates. Let's put some numbers to this. Assuming we're working with the second provisional payment at the end of February 2025 for an individual, and let's say this person's taxable income was not more than R1 million. If you've looked at my previous videos, some of these numbers will look familiar to you because I've drawn on the same numbers that we used in some of the previous examples. So let's say we have this taxpayer who had a basic amount, the last assessed taxable income of 750,000 Rand. But this person, when he put in his second estimate for his second provisional payment, he really thinks his business is not really doing so well. And let's think why it might be. Well, he might, for example, have a debtor, a big debtor, who should have paid him, hasn't paid him, and he feels that this debtor is not going to pay. And it's going to be a bad debt. He believes this debt is irrecoverable. And so whereas last year he had a good year, all his debtors paid him, and he had a taxable income of 750,000, he thinks that he's going to have this bad debt this year of maybe 100,000 Rand. And so he estimates that his taxable income is actually only going to be 700,000 this year. Now it's dangerous, very dangerous to go below the basic amount. But he thinks he's justified in doing that, and so he put that estimate in. Now, based on that estimated taxable income, going through tax per the tables, take out the rebate. If he was 66 years old, that's the total rebate he gets for the year. And so his tax liability for the year on the 700,000 is 162,998. Let's assume he has paid some employees' tax during the year, 120,000. He made a first provisional payment of 4,633. So his second provisional payment based on that is going to be 38,365. All right. Now, the thing is, has he underestimated? Well, think about the threshold. Taxable income below R1,000,000. His second estimate should not have been less than the lower of 90% of final assessed taxable income. We'll come to that one. Or the basic amount. Well, he's certainly gone below the basic amount. When we come to his final assessed taxable income, let's assume it comes out at 780. It actually turns out that the debtor he thought was going to be a bad debt ended up paying him. And so he couldn't claim that bad debt deduction for the year because he actually did recover the money. And so his final assessed taxable income turns out to be a lot better than he thought it, or a lot higher than he thought it would be. So his basic amount was 750,000. He knew that at the time he did his second estimate. 90% of actual final assessed taxable income is 90% of the 780,000, which is 702,000. The lower of those two numbers is obviously 702,000. His estimate should not have been less than that, but he did come in less than that because he actually estimated 700,000 when he did his second provisional return. So he does have an underestimate. He's gone below the threshold. So what is his penalty going to be? It's going to be 20% on the difference between what is the tax that should have been paid and what is the tax that he has actually paid by the last day of the year of assessment. So what is the tax he should have paid? Well, he should have used that estimate not less than the lower of basic amount or 90% of taxable income. All right, so he should have based his tax on an estimate of 702,000. And that would have been tax of 163,778. That's how much tax should have been paid by the second provisional payment, had he used the correct estimate. He has actually paid, based on his return, which we can see over here, he's paid PAYE, first provisional, second provisional, so he's paid a total of 162,998. All right, so the difference, in other words, his shortfall in payment, his underpayment as a result of underestimating his taxable income is 780 Rand. He should have paid 163,778. He's only paid 162,998. So he's underpaid 780 based on the provisional tax rules. All right, we're not getting to the final assessed taxable income yet. This is just according to the provisional tax rules. He's underpaid by the last day of the year of assessment, 780 Rand. So the penalty is 20% on that amount, which is going to be 156 Rand. Now you might think, well, that doesn't look so bad. But of course, the numbers could result in this penalty being a lot higher. And in fact, what would have happened if, and this is what happens in many cases, is people miss the second provisional payment, or they feel that their cash flow is tight and so they don't submit the return for the second provisional payment, and that can also trigger the underestimate penalty because now you haven't put in an estimate of taxable income by the last day. In fact, they talk about 4 months after. But what if your second provisional payment was paid late? All right, so using this same set of numbers that we had here, but let's say, and if we go back to this calculation here, he only paid that second provisional payment sometime later. Now remember that your penalty here is based on what tax should you have paid minus what have you paid by the last day of the year of assessment. So if you only pay your provisional tax later, then by the last day of the year of assessment, you haven't made that second provisional payment. So you're going to end up with a late payment penalty on that amount of the second provisional payment, the 38365, so 10% on that. And when you work out your underestimate penalty, of course, you say, what is the tax that I should have paid, using the same calculations I did a few minutes ago, minus what tax have I actually paid, employees tax and provisional tax, by the last day of the year of assessment, by the 28th of February 2025. And in this case, I had only paid my employee's tax and my first provisional. I hadn't actually by that stage paid my second provisional. So I've actually only paid 124,633. So then the difference is now 39145 as opposed to the 780 I calculated just now. And so my penalty is 20% on that amount, which is 7,829 Rand. Now, I did mention earlier that if you have a late payment penalty and an underestimate penalty on the same provisional payment, then I reduce my underestimate penalty by the amount of my late payment penalty. So I take that off over here. It leaves my underestimate penalty as 3992.5, but I still have my late payment penalty as well. So actually my total penalties on that second provisional payment, late payment penalty and the underestimate penalty, is 7,829 Rand. Now, that's because you've made the payment late, you've ended up with a lot more penalty than if you had at least made the payment on time, but you ended up with an underestimate. But these penalties, as I say, can be extremely onerous. So the best way of avoiding the penalty is to pay your taxes on time, so you don't have the late payment penalty, and try and get that estimate correct. And remember that the basic amount, if your taxable income is below R1 million, the basic amount is a safety net for you. Don't go below the basic amount unless you are really, really sure that your taxable income is going to be a lot lower in the current year of assessment compared to what it was in the last year that you were assessed. So use that basic amount as a safety net. Of course, if your taxable income is more than R1 million, that is not going to help you with your second provisional payment, because if your taxable income is more than R1 million, then your second estimate has to be at least 80% of your final assessed taxable income. And that can be quite difficult to get that correct. But try as much as you can in order to avoid these penalties. So the late payment penalty, the underestimate penalty, just to wrap up. So the late payment penalty of 10% applies to both your first and second provisional tax returns. Your underestimate penalty only applies to the second provisional. And of course, I've said nothing about the third provisional payment, because the third provisional payment has a role. It's a voluntary payment, but it doesn't help you as far as your penalties are concerned, because as I say, your underestimate penalty is based on the shortfall of what should you have paid minus what you have actually paid by the last day of the year of assessment. So any top-up payment that happens after the end of the year of assessment is not going to help you as far as that underestimate penalty is concerned. But we'll talk in the next video about what then is the role of that third provisional payment. What is it there for, and how can you use it? But that's all for me on the provisional tax penalties. I hope you have found this useful. Please like and share on YouTube, and share this with your friends. I think it's really important for people to understand more about the South African tax system, and I hope this has been helpful. Thank you. Bye.